Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 8th of April, 2023, and it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of April. And just a quick overview, all these pairs started the week were very strong. There was strong move on Monday, followed through on Tuesday before retracing back towards the end of the week. Similarly with the cable, except for the Aussie dollar, where it did break out higher on the Monday, but then from Tuesday it started dropping back lower with the news that the RBA did not increase rates and made a pause and held the interest rate at 3.6%, and that was on Tuesday, and it has weakened since then right through the end of the week. So we'll take a look at what the key triggers were for the initial move and then the retracement back lower for last week, and as well as review of the upcoming news that could impact the US dollar especially. All right. So right from the start of the week, the manufacturing PMIs came out lower than expected on Monday, and that triggered the US dollar lower already right from the start of the week. And the surprising figure was for services on Wednesday, where it was expected to be, it has been quite high for the past few months, but surprisingly it fell lower than expected at just 51 versus expectation about 54. Then this triggered further weakness until Friday, where the non-farm payroll figure came out better than expected. So this helped the slight retracement higher for the US dollar. And surprise for the week was the RBA, where they did not increase rate. They were expected to increase by 0.25%, but they decided to pause and remain at 3.6. So that move triggered a weaker Aussie dollar. And we'll see whether it's going to weaken further for this coming week. And this week is mainly looking at inflation figures with CPI on Wednesday, followed by the PPI. There's also the FOMC meeting minutes from the last meeting last month. And on Friday, retail sales is always a key indicator for the economy as well. And also watch out that on Monday, there should be also low liquidity with a long weekend holiday for the Eurozone, some countries in Eurozone, UK and Australia. Falling Good Friday, there's also Easter Monday holiday. All right, so we'll take a look at the US dollar index and to see how the US dollar fared against the major currencies. But for now, let's return to the other majors. Let's begin with the Euro. And right from Monday, it did dip lower as a continuation from the previous Friday's weakness. But then with the poor ISM manufacturing data, it managed to bounce back to the previous week's high and continued on the Tuesday, and before starting to retrace from the Wednesday, even though the ISM services figures were weaker than expected, and right until Friday with the non-farm payroll report, which came out better than expected. So this coming week will be a key one where it will be exposed to the CPI figure on Wednesday. And on the weekly time frame, it closed as a spinning top. A couple of spinning tops already for the past 2 weeks with bullish close, but now with this upper wick, it seems to have lost its momentum right at the 7.86 fib retracement. So that could be some weakness this week, and we'll see how far it's going to dip down. And especially if the CPI figure comes out still fairly strong, we'll have to see. But for now, the 7.86 is still going to be a strong resistance zone. The 107 is going to be a strong support, but we can move this interim support higher to the 50 fib area. And let's move a key support a bit higher now to the 107 area. And together with the 38 fib retracement. All right, let's compare this with the US dollar index, the DXY. Here's the DXY. And right from the start of the week, it already weakened after a gap up actually at the start of the week, and fell throughout the day, falling below the engulfing the previous few days of a bearish move, and basically a continuation. Turns out to be a continuation, and broke below this lower trend line, and that's why there was a further weakness on the Tuesday, and finally did almost hit the 101 round figure. That will be a key support. Managed to recover back on the Wednesday, even with worse than expected ISM services figures. And then on the Friday, recovered on the non-farm payroll figures, jobs added, which was better than expected. So let's move this down to support level here at the 101. And for now, let's move this down to the 62 fib retracement level. Key support, key resistance is still up there, but we could see another key one here at the 103, where the daily 55 is coming down. That's right at the 50 pips retracement area. So it's a critical one for the week because it has dipped lower, broken below the trend line, came up to retest. And we'll see if there's going to be a continuation move, or whether it's able to break through the 102 and get to the next fib for attempting to climb out even further if possible. It could be rejected here, but it could also still find support and form a higher low. and either consolidate within a channel. But we'll see how fast this will form until the CPI figure is released. All right, so some key news for the US and US dollar. So something to watch out for on the US dollar index and the related major currencies. Right, and on the weekly time frame, and it's still a bearish close, although it did find support from the 101. So it is possible that it could dip lower first, and we'll see how much support there is to form a higher low. Okay, let's move back to the other major pairs and review how they would likely react to the upcoming US dollar news. Let's move on to the cable, where after strong move on the Monday and Tuesday to hit the 125, it couldn't sustain and dipped back lower from Wednesday right through the end of the week, and 125 all along is a very key round figures resistance zone. So let's mark this area here. And we could also move the interim support to this area where the 123 along with this previous swing high, and move the key support to the daily 200 where the 21 pip retracement is. Okay, let's see if we need to adjust the pip levels. We could also let's move this support line here and move the swing low and the swing high, recent swing high. And the support, the key support would be at between the daily 200 EMA and the 50 pip. Okay, and let's take a look on the weekly time frame as well. It has been struggling to close higher. It has been pulling back towards the end of every week. So let's see whether it's going to pull back into the support, interim support zone at the 123. Okay. So there is also UK GDP news this week, and apart from the US news. All right, let's move on to the Aussie dollar. And the Aussie dollar started strong along with the other major pairs by breaking out of the triangle and attempting to reach the 68 area, but just fell short, and the RBA announced that they will hold rates for now. And on Tuesday, that was Tuesday, and that drove the Aussie dollar back down lower and below the lower trend line of the triangle right into the support zone. So let's see whether there's a possible, after this spinning top, whether there's possible pullback to retest the 67, and then perhaps we'll see if there's any news impact from the US that may drive the Aussie dollar lower. There's also Australian jobs report coming out on Thursday. Right, let's see, we need to update some of these resistance here. Looks like it's still valid. The support zone is fine, and the key support at 66 together with the 38 fib. Okay, on a weekly time frame, it's a long upper wick here, so it's in danger of further bearish momentum move lower down to the 38 fib. Okay. So you'll need to watch out for the US dollar news and to see what impact it has on these major pairs. It's going to be a key one with inflation figures if it's still running high. And that could still influence the Fed to continue to raise interest rates, maybe another 0.25%. And that's in next month in May. Okay, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.